Today is October 10th, 2018. I'm John Manzella, and this is the Manzella Report. The U.S. economy is estimated to grow by 3.1% this year, according to the Federal Reserve's median rate, followed by 2.5% next year and 2% in 2020. The Wall Street Journal's economic forecasting survey of more than 60 economists indicates very similar projections. So this year, economic growth looks good and momentum is positive. But it's really the uncertainty I worry about, as well as the black swans, or highly improbable events that together can create severe risks that are nearly impossible to predict and even more difficult to avoid. And sometimes black swans appear out of what seems like very manageable situations. Now, the agreement between the US, Mexico, and Canada resulting in a modified new NAFTA is good news that helps to reduce uncertainty and market volatility. And the likelihood that the US and European Union can get on the same trade page is another step in the right direction. But due to a variety of factors, especially the direction of the US-China trading relationship, this level of uncertainty has risen. And when companies are faced with uncertainty, what do? Well, they spend less and they postpone investments. Two important factors that put downward pressure on economic growth. So it's not surprising why the IMF has downgraded its economic growth projections for the US, China, and the world as a whole. Now, ironing out differences or problems with the Chinese will be considerably more difficult than working out our differences with the Mexicans, Canadians, South Koreans, and Europeans. For one, China needs to implement much-needed market economic-based reforms if it wishes to sustain higher levels of growth in the future. And these reforms would go a long way to eliminating many of the irritants that have become a focus of President Trump. But for China to really reform its economy, the government would be required to withdraw subsidies and other much-needed support from poor-performing Chinese industries. And doing this can cause unemployment to rise and social unrest to skyrocket. As a result, President Xi is walking a tightrope. It's more like a high wire act. If he doesn't implement these much-needed economic reforms, growth will likely continue to shrink. If he reforms the Chinese economy too quickly, he could have a Tiananmen Square situation on his hands. Now, many of the demands placed on China by President Trump may be long overdue. But the odds of striking a deal that covers all of them is unlikely, at least in the short term. As a result, market volatility and uncertainty, which really is the enemy of prosperity, are likely to continue for some time. Let's just hope that a combination of events don't produce a black swan. I'm John Manzella.